Where do you expect mortgage rates to be for the whole of 2019? Because they spiked a lot toward the end of 2018 with the Fed and with the change in the bond market.
Right. I mean, the Fed's been working on trying to normalize rates overall, as well as pushing.
What does that mean, normalize?
Well, 3.5 is not normal for a mortgage rate.
No.
So getting rates up into, I think, the 5 to 6% range. That's, you know, we were there briefly at the end. We've had a pullback for reasons outside of the mortgage market in the last couple of months, but I think something in the low to mid fives is where we should expect to be in 2019.
I've seen a lot of people revising their predictions lower, though, for mortgage rates. It was supposed to be 5, 5.5. In fact, when I did my predictions in December, that's what everyone had, so we did that. And now I'm hearing 4.5 to 5 because of the latest drop.
I mean, there's lots of things that drive the mortgage rate that are really out of control of the mortgage market and the housing market in general, and that's what we're experiencing with a 4.5% rate today. Under more normal circumstances, without recession, all this global uncertainty, I mean, all the things you were mentioning earlier in the show, set those aside, and rates should be
Is there, you know, Diana, okay, so if we go to 5 or 5.5, whatever, we all know, and you've said many times, people don't buy homes on the price. They buy homes on the monthly payment.
Absolutely.
Right? So they do all the math with rates and everything. They say, I can afford $2,000, and this is what it gets me. And they always, by the way, spend pretty much the most that they can. Any sign that the housing market can sort of stand up in the face of higher rates?
Well, you know, we saw in the fall when rates spiked, home sales dropped off really
what about
dramatically.
Prices?
Well, prices started, as I say, the gains started shrinking. They're still gaining compared to a year ago, but the gains in home prices
slowing growth would be a way to define it.
Yes,
okay.
I say gains are shrinking. So anyway, but they're very sensitive right now. I mean, we saw rates drop back in December, and mortgage applications this week, last week, really spiked. I was surprised to see how much on the purchase application side. So there's great demand out there, and as soon as they get, it's not just what can I afford, what can I qualify for.
The most common age in America, the most common 3 years, because I always get it mixed up, so I don't want to say it exactly, is 25, 26, and 27. Those are the 3 most populous age groups in America. There is a huge demographic boom that is coming to this country.
Give us 5 years.
And they're going to start getting married and having kids. And, but then again, you can say, well, they all have so much student loan debt, they can't afford a house. Will that demographic shift benefit real estate long term?
Yes. I mean, we already see it. We're seeing a rise in home ownership, largely driven by millennials, the older millennials already buying homes in their early 30s. And the student loan piece, they gain the benefit of a better income because they're more educated, which is good for being able to buy a house. The data is actually showing that by their mid-30s, there's no difference in the home ownership rate for those who do and don't have student debt.
But you don't believe in this whole millennials don't want to own, they want to rent, they don't want the strings, they want to be urban.
Once you have children and get married, it all changes.
I know, I hear you.
You're so right. I mean, you have that apartment in a city, and then you've got a kid, and all of a sudden that baby crying 4 feet from you, you're like, I need a basement.
Exactly.
I need a man cave to go hide away for that toddler. It's a huge thing. Demographics are going to play a large role in housing going forward.
And I think it's not, everybody talks about the millennials, the baby boomers. I think we should be more focused on them because they're going to be selling, downsizing. A lot of them are buying. A lot of them are in a good, wealthy position now. Following the recession, they were not, so they slowed their downsizing because of the recession. Now they're picking back up again with a better economy.
I'm actually worried about the baby boomers for a slightly different reason, and that is we don't have a lot of supply to give new homes to all the millennials, and that's because more than half of all homes today are owned by either baby boomers or the silent generation, and they're aging in place. And they've got their low rates and they're locked in, and so they're not going to make that home available. And so all this millennial demand is coming online. Where is the supply?